Yeah, what were the findings?
Hi there. Well, I think firstly, the main driver for EM returns next year will undoubtedly be the effective rollout of vaccination programs. And I think jubilant markets so far may not yet have accounted for the intricacies of vaccine distribution, especially in emerging markets. So for example, Indonesia has over 6,000 inhabited islands. Another key driver for EM will be the impact of massive stimulus spending on fiscal deficits. Now, I believe that once the dust has settled and vaccines have been effectively distributed, investors' focus will turn on how developing nations will pay for their deficits. Secondly, investors continue to favor Asian currencies and stocks relative to its other regional peers. And a lot of this has to do with the fact that many Asian countries have had a better handle over the virus. But for bonds, Latin American ones are the firm favorite among respondents due to the high yield offering accompanied by dovish central banks.
Marcus, with all the market drivers at the moment in mind, what are investors' top picks when they look at the various asset classes, stocks, bonds, currencies next year?
Well, I guess hardly unsurprisingly, Chinese stocks, bonds, and currencies are the top picks for investors in 2021. And this is despite the already stellar performance this year for yuan assets. This may be tacit acknowledgement that China will maintain a lead, especially in the first half, as emerging economies will take time to achieve herd immunity, even more time for consumption and output to recover back to normal. Indonesian assets are also another firm favorite among investors, with the stocks and bonds among the top three picks. I think we've already seen a prelude of that on Monday after Indonesian equities rallied when the nation reported that it had received its first batch of vaccines from Sinovac. Investors are also big on Mexican currencies and bonds, supported by the attractive yield and more muted inflation next year, especially compared to Brazil.
Marcus, how do investors have a look at inflation, growth, and indeed monetary policy reaction?
Yes, well, I think in general, investors expect an acceleration in inflation across most developing economies, with the exception of Russia, Poland, and Mexico. Investors have even a stronger conviction for growth next year, with respondents expecting all emerging economies to see a rebound and recovery in 2021. Of course, this will be aided by dovish monetary policies, with respondents expecting all central banks to hold rates next year, with the exception of Turkey. And I think all these factors really play into investors' forecasts for EM to outperform DM across all asset classes in 2021. Of course, as EM will be boosted by a combination of accommodative monetary policy, growth recovery, and a weakened dollar.